Most people think modern finance was invented to build prosperity, banks to help business, bonds to fund growth, markets to move capital efficiently. But if you follow the receipts, you find a darker origin story. Modern finance was built to fund war. Because war has one problem every ruler eventually hits: you can't pay for it fast enough. Taxes are slow, gold is limited, loot is uncertain, but war doesn't wait. So states discovered a weapon more powerful than any cannon, a system that lets you spend tomorrow's money today. That weapon is public debt. You're watching Hidden Money History. Here's the breakthrough. When a government issues a bond, it sells a promise. Lend us money now, and we'll pay you back later, with interest. That sounds normal today, but in historical terms, it was revolutionary. Because once a promise becomes tradable, it becomes an asset. And once it becomes an asset, it becomes a market. Now you can finance war at scale without immediately having the cash. And the moment governments learned that trick, they never unlearned it. The most famous turning point is 1694. England is in a major war and running out of money. So the state makes a deal. Private investors lend to the government, and in return they receive interest backed by future taxes. A permanent machine is born, debt becomes policy, and finance becomes a partner of the state. This changes everything. War stops being limited by the treasury. It becomes limited by credibility. If investors believe you'll repay, you can keep borrowing. If they don't, your empire starts bleeding. And here's the trap. The people who fund war don't do it for patriotism. They do it because it's profitable. Government debt becomes the safe investment, a reliable stream of interest, a pipeline from public revenue to private holders. And the state loves it too, because borrowing feels painless today. The cost doesn't show up as a tax hike in the moment. It shows up later. That's how war helped build the modern financial system, by turning national survival into a bond market. Once public debt becomes normal, a second invention appears: central banking as a backstop. Because war finance creates fragile moments: panics, bank runs, currency stress, bond crashes. So governments build institutions that can stabilize the machine, not to protect ordinary people first, but to keep the funding system alive. Now zoom out and watch what this produces over centuries. 1. Permanent national debt, not a temporary emergency tool. A permanent operating system. Old bonds mature, new bonds replace them. Debt is rolled over, not paid off. And that becomes normal, sovereign finance. 2. A society plugged into the war machine without noticing. Pensions buy government bonds. Banks hold them as collateral. Insurance companies depend on them. Even safe savings often route through the same debt pipeline. So the public becomes both the funding source and the political cover. 3. Inflation becomes a hidden partner. When debts get too large, printing and devaluation become tempting. Not as a conspiracy, as a shortcut. War creates debt. Debt pressures budgets. Budgets pressure central banks. And ordinary savers quietly pay through purchasing power loss. That's the real trap. Modern finance doesn't just help economies grow. It locks economies into needing constant confidence. And confidence has a price. Interest rates, austerity, bailouts, currency management, debt cycles. War didn't just invent modern finance. War made finance unavoidable. So here's the uncomfortable question to leave you with. If modern finance was designed to fund war efficiently, why are we surprised it doesn't feel designed to make ordinary people free? Now, I want your answer in the comments. What do you think traps people harder? National debt, inflation, or the banking system itself? And subscribe to Hidden Money History for more episodes where the past leaves receipts.